A new report shows sales in Ontario are down by 50% in some areas. And Hamilton, it's right in the center of that collapse, with sales down 46% and prices sliding 24%. For years, Hamilton was the affordable alternative to Toronto. That pitch was simple: cheaper homes, quaint neighborhoods, waterfalls, and a GO train ride to the city. It worked. Investors piled in, families fled Toronto and came here, and prices exploded. From 2020 to 2022, Hamilton home values jumped by more than 50%. Detached homes that once sold for 600 were suddenly trading over $1 million. Condos downtown shot up 30 to 40% in less than a year. The frenzy was wild. Bidding wars, lineups at open houses, offers 300 grand over the asking price, but that rise was never sustainable. And when the Bank of Canada began raising rates, the cracks in Hamilton showed first. Listings began to sit, closings started collapsing, and sellers were forced to slash prices. We're now seeing homes sell for 200 grand below their peak. Condos that once went for 750 grand are being dumped for 600. Families who bought in 2021, they're underwater. This isn't a pause, it's a reversal. Take downtown condos. Pre-construction buyers sign the paper at peak prices. 600, 700, 800 grand for 1 and 2 bedroom condos. Now those units are worth less than the mortgage balance. Assignments are flooding the market and investors are walking away from deposits. On the mountain, detached homes that had 20 offers in 2021 now sit 60, 90, even 120 days. Price cuts every 2 weeks, still no bites. Hamilton was sold as a comeback story, from steel town to boomtown. But the reality is darker. The city's job base hasn't changed. Incomes never kept pace, and without cheap credit, the market doesn't work. This is why Hamilton's collapse is sharper than almost every city in Ontario. The hype was built on debt, not on fundamentals. And when the debt became unmanageable, the dream unraveled. Investors who thought they'd ride the wave forever are now begging to escape. Families who stretched for a forever home are facing renewals that double their payments. And the scary part, this is only the beginning. Hamilton isn't in a slowdown, it's becoming Canada's newest ghost town. The pressure building under the Hamilton market, it isn't just about prices falling, it's about payments exploding. For years, families locked into record low rates, mortgages at 1.5%, 2%. They stretched every dollar because the math worked then. Now those same families are renewing at 4.5%, 5%. The math doesn't work anymore. A $2,000 payment has turned into $3,200. For some, $3,500. That's an extra mortgage payment every month with the same paycheck. Groceries up, gas up, utilities up, and now the housing bill, it's crushing. This is why listings are rising. Not because sellers are testing the market, but because they have no choice. In Stoney Creek, row houses that used to sell for over $1 million at the peak are now struggling to break 700 grand. Owners are cutting, then cutting again. In Dundas, Century homes that used to spark bidding wars are sitting, months without offers. And Ancaster, the so-called luxury pocket of Hamilton, $1 million properties are quietly taking 6-figure haircuts. Every corner of the city is bleeding out, from starter homes in East End to prestigious streets in Ancaster. The psychology, it's collapsing even faster than the prices. A few years ago, buy now or get priced out forever. Last year, hold on, it'll bounce back. This year, get me the hell out of here before this gets worse. This shift changes everything, because when buyers believe tomorrow will be cheaper, they stop buying today. And when sellers believe tomorrow will be worse, they rush to sell today. That's why inventory is climbing at such a rapid pace. That's why cuts are accelerating. That's why confidence is totally gone. This isn't a balanced market, it's a panic cycle. Every reduced listing drags the street down, and every neighbor watching from the sidelines, they're realizing their equity isn't safe. The ripple effect is brutal. Families who thought they would stay forever are being forced into for sale signs. Investors who thought Hamilton was untouchable are exiting at a loss. The dream of stability here, it's evaporating. And this is why if you're a Hamilton homeowner right now, you need to think differently, because doing things the old way could cost you tens of thousands of dollars. The difference between following the herd and making the smart move could save you 25 grand or more. So here's my advice. Click the link below and grab my free seller guide. It'll show you exactly how to sell smarter, faster, and cheaper. The damage in Hamilton, it doesn't stop with homeowners. When housing collapses, the whole city feels it. Contractors, renovators, mortgage brokers, even furniture stores. Business is drying up because when people stop moving, they stop spending. Drive through this city. Showrooms that used to be packed in 2021 are empty. On Ottawa Street, where home decor shops thrive, windows are quiet. Sales have completely flatlined. And trades, they're hurting too. Renovation crews that used to book 6 months out are scrambling for jobs. It's a chain reaction. No sales, no renos, no upgrades, no confidence. And the fallout doesn't stop at business. It hits City Hall. Hamilton relies heavily on property taxes. When values fall, revenues shrink, and when revenues shrink, services get cut. Road repairs delayed, community programs reduced, recreation budgets squeezed. The very things that make the city livable start to vanish. Meanwhile, costs keep climbing. Inflation isn't gone, groceries are still up, utility bills still high, insurance climbing, so families are squeezed at both ends. Higher costs at home, lower services in the city. That's how a market crash turns into a community crisis. And the signs, they're already visible. Walk downtown on a Friday night. Less foot traffic, empty stores, restaurants with too many tables open. Go to the suburbs, see stalled subdivisions, developers who promise hundreds of new homes now pulling back. Hamilton was supposed to be booming. Instead, projects are paused, construction sites abandoned, lots left half finished. The optimism that once drove this city forward has left the building. And here's the biggest danger. When confidence disappears in a housing-driven economy, it doesn't come back fast. Buyers freeze, investors vanish, and everyone waits. That waiting game turns a vibrant market into a ghost town. Hamilton is already showing it. Sold over ass banners, haven't seen one in years. What's replacing them? Reduced again, open house this weekend, available now, signs of desperation. Signs of a city caught in quicksand. And the longer it lasts, the deeper Hamilton sinks. This isn't just about falling home values, it's about a city losing momentum, losing confidence, losing its future. The warning lights aren't subtle anymore. They're flashing bright red, and Hamilton is at the center of it. Where does it go from here? What's the next chapter for Hamilton? First comes denial, we'll wait it out. Then comes delay, let's give it one more month. After that, capitulation. Drop the price, take the offer, just get it done. That's the phase that resets the market, not a date on the calendar, a behavior. The bottom isn't when the headlines say recovery, it's when sellers finally accept today's reality and buyers stop waiting for tomorrow's discount. Right now, Hamilton is stuck in between. Too many listings priced for last year, too many buyers sitting on the fence, too much wishful thinking on both sides. This is how markets freeze, not with drama, with silence. If you're holding a property here, you have a choice. You can hope or you can plan. Hope watches numbers melt. Plan creates an exit. A plan means pricing for today's buyer, not the neighbor's sale from a different market. It means launching clean, repairs done, photos that actually sell, a listing that answers objections before they show up. It means momentum. Day one attention, 7-day decision, no lingering, no slow bleed. It means negotiating like every week costs money, because it does. And it means avoiding the traps that kill deals, chasing a vanished comp, drip price cuts that scream stale, accepting weak financing, letting conditions drag. If you're staying put, the playbook shifts. Cut the dead weight and budget. Stack a cash buffer, lock in certainty where you can. Get proactive about income, second suite, house hack, or a short-term plan that actually pencils. If you're buying, buy with discipline, not dopamine. Focus on payments you can live with, location that endures, and a hold period long enough to matter. Not hero trades, not lottery tickets, not chasing old highs, because Hamilton's story doesn't end here. But the chapter has changed. The slogan won't save you, neither will nostalgia. Math will. Process will. Speed. The winners in the city won't be the loudest. They'll be the ones who move first, price right, and execute clean. That's how you stop the drip from becoming a flood. That's how you turn uncertainty into a plan. So here's where we land. If you need a roadmap tailored to Hamilton, one that gets you out clean, protects your downside, and maximizes what you keep, click the link below and grab my free seller guide. Then if you'd like, book a call with me. I'll show you the launch plan, the pricing logic, the negotiation traps to avoid, and the exact structure that can put an extra 25 grand back in your pocket. Hamilton is resetting. You can wait for that to happen to you, or you can make the next move. Your call.